Thank you for joining this evening's live webinar on building wealth and accessing mortgages. Welcome to all our members, guests, and our panelists. My name is Monica, and I'm your moderator today. First of all, I would like to once again welcome each and every one of you for making time available for these conversations today. Our audience is so excited to have each panelist, youths of African descent representing different parts of the globe and giving us this huge opportunity to be able to have these conversations with you. CASA Foundation is excited to receive the mandate to manage the Black Entrepreneurship National Ecosystem Fund, and our team will also provide with more information about it. So here is an opportunity for you today from our esteemed guests to hear from our esteemed guests on how to build wealth and generate income. To all our participants and audience, this is a live information session. You will have the opportunity to ask a few questions after the session. Please leave them in the question and answer chat. Our organizers will pick them from there. Our team will also address some of your questions as we go along and add resources that you need through the general chat box. As the Zoom room is full, we encourage all other esteemed EPA participants to move into the CASA Foundation YouTube link in the box. I also encourage you to share the YouTube link with all your groups, associations, and friends so that they can take advantage of the session. I will now turn it over to Dr. Olutin Oilade to introduce our esteemed guests. Over to you, Dr. Olu.
Good evening, everyone. It's such a joy, it's such a pleasure to be here tonight, welcoming our esteemed panelists tonight and the speakers from Alterna Savings and Loans. This is a regular EP Academy class, and part of the EP Academy class promotes the Black Advisory Hub and introduces that to the community. The idea of the Black Advisory Hub is to actually have that platform where people can have answers to their questions regarding wealth creation, asset management, how to build communities, how to get partnerships, and so on. And so CASA Foundation is proud to partner with EP Academy to bring this session to you tonight. And the idea at the end of the day is that small businesses looking to scale their businesses, looking to increase partnerships, or even form new partnerships will be able to do that after a session like this. The session is actually for 7 weeks, every Tuesday, 5 p.m. to 6:30. At this particular session today, we thought it wise to bring in a group like Alterna Savings and Loans, a firm, a group of financial institution that has been in operations for over 113 years in Canada. The idea is that if an institution has been sustained for this long, definitely they've been doing something totally different from what we're all used to as established businesses and even as startups. So we need to learn from them. But the added benefit is the fact that Alterna Savings and Loans bring to us today the new product that they've crafted together for the Black community, that has to do with mortgages, access to how you build your profile and access the mortgage product that is being introduced to us tonight. And so it's my honor and it's a great privilege to welcome Susan Henry, the Director of Microfinance from Alterna Savings and Loans. And I know she's here with some other senior executives from the financial institution, Alterna Savings and Loans. And so I'm just going to turn it over to you, Suzanne, and allow you to chat, with class tonight and also share some insights with our audience on the other platforms where this has been streamed. Susan, over to you. Feel free to introduce your team and share with us tonight. The floor is yours. Thank you.
Thank you. It's really a pleasure to be here, and I can't express how excited I am to have this opportunity to provide this educational component on how home buying can be a source of creating wealth for business sustainability. I really want to first thank EP Academy and Olatuyen for having the insight to add this topic to your entrepreneurial program. So again, I'm Susan Henry, Director of Microfinance and Economic Inclusion at Alterna Savings. And I have been with Alterna for over 20 years. And in my role, I manage the strategic direction of our community microfinance program. And that program works to address socioeconomic inequalities by creating opportunities for financial independence and reducing barriers to banking for those often excluded from financing. And through our programs, we offer loans up to $50,000 to entrepreneurs with a focus on women, new and racialized Canadians, social entrepreneurs, Black entrepreneurs, and low-income individuals. So I also came from an entrepreneurial family. I operated a successful business with my partner before moving into banking. My son is also an entrepreneur, and he founded a commercial production company. And my daughter, a recent graduate, is in a youth entrepreneurial program and looking to start her own business. So I'm going to speak to you really from an entrepreneurial lens. But before I do that, let me introduce Michael Borelli, who's joining me this evening. And he's going to provide the technical presentation on home buying. He's the expert in that area. So Michael, do you want to introduce yourself?
Hey, Susan, it's Maddie. Michael just had a technical issue with his microphone and camera. He's going to log right back in right now, just so you know.
Okay, great.
2 seconds.
When Michael comes in, we'll have him introduce. I'll just continue. And before I pass it to Michael, he'll introduce himself. So what are we going to cover today? I'm going to tell you a little bit about Alterna and who we are. And I will speak on the importance of home ownership and entrepreneurs. Michael is then going to get into the technical part of the presentation on housing market, or how do you get ready for home ownership, the costs, some of the terminology that you may need to know, how is your credit score important to home ownership, and much more. So let's get started. Before we do get started, in terms of questions, if you could hold those questions to the end, and then we will be able to answer those for you. If you are familiar with Alterna, please go ahead and put in the chat that you know who we are. But Alterna Savings and Credit Union has been the good in banking for over 113 years. So we've been around for quite a while, since 1908. And Alterna is the 9th largest credit union in Canada. And Alterna is made up of Alterna Savings Credit Union and its wholly owned subsidiary, Alterna Bank. And together we have over $10 billion in assets under management. We are the first full service member-owned cooperative institution outside of Quebec. And we share our expertise with more than 186,000 members through a network of 36 branches across Ontario, including our partners, Peterborough Community Savings. We also have a call center and digital channels as well. Sometimes we hear 36 branches may not be a lot, but we also have access to 43,000 surcharge-free ATM machines in North America, with the exchange network and the all points. So lots of places where you can do your banking when you come to Alterna. So we're often asked, well, what makes you different from the banks? Like, what is a credit union? And, a credit union is a member-owned cooperative where the members have a choice and they have a say in how we operate. When you open your account, you purchase a member share. and you have a say, like I mentioned, in how we operate, such as voting for the board of directors and changes to the bylaw. Each member gets one vote, and that vote is not allotted based on who you are or your status, or votes are equal. Anyone can be a member at Alterna. And unlike banks where their profits go to shareholders, the credit unions' profits goes back into the community. So it goes back into our members in things like making sure we can give you the best personalized member services in lower fees, in the products we offer, and how we invest in communities like our community microfinance program, a program that you won't see at traditional financial institutions. So, why are we talking about home ownership and entrepreneurs? I mentioned I've been in this role for 20 years and working with many entrepreneurs. And if you had to ask me the one thing that keeps me up at night, it's really around building assets as an entrepreneur. And one of the ways that we can do that is through home ownership. This financial asset is so important to entrepreneurs. I see entrepreneurs, they're usually busy with the day-to-day operations of their business, and many are not thinking about their financial future. And this is where we come in as a credit union, as a financial cooperative, to give you that education and to help set you up for success through home ownership and having this asset. And we understand that many entrepreneurs, you don't have inherited generational wealth, or you don't have the entrepreneurial capital. So what can housing provide you? If you're able to be a homeowner, it's really, you have that equity that you can leverage to start or expand your business. It can help with things like your cash flow and tax benefits. So really, it's an important tool in terms of how you can really gain assets as an entrepreneur. And there were studies that show that business owners who are homeowners, they have an easier time securing financing, because they may have equity in their property. And whether the financial institution use that equity or not, there's a comfort knowing that you have this piece of asset, which is really important. We also know that home ownership can facilitate home-based self-employment. And what I mean by that, it can provide you that space. Many of the entrepreneurs I see or work with, they have home-based businesses. And oftentimes, a home can give you that flexibility. You may not need to rent because you can work from your home space. You can have a home office. There's also certain deductions that can come with that. So it's that flexibility in being able to work from home. We saw during this pandemic that, you couldn't go to your offices, and working from home was an absolute choice you had to make. So having, this home that you can now use as your business, again, is a tool that is great for entrepreneurs. So I just want to leave you with some tips, because this is about education. And Michael is going to get into the technical part, and you may or may not be ready for home ownership, but we want to provide you and set you up with the tools from now to get you started. So as an entrepreneur, I would always say, when you keep your records, that you want to be able to separate your business from your personal, because you want to be able to show income. Michael will get into the technical part of the income that you would need, but this will save you a lot of time if you already have these two things separated in terms of your business and personal income. You want to be able to file your business and personal tax returns for so many reasons. So many entrepreneurs don't realize the rebates they get when they file their taxes, especially their business taxes. So it's important to file your business and personal taxes as well, because again, on the personal side, there could be some rebates you could have, but the lender is going to want to see these types of tax returns. So it's important to get into the habit to start filing them from now. And I often say, pay yourself. Entrepreneurs, again, they're not paying themselves. So it's really important to pay yourself. I often say, I'm a little bit unorthodox, and I take a cash flow projection. And in the expense line, you put wages for yourself. So you know exactly what you're going to pay yourself from your business, because again, that's going to help you with the revenue, the income that you need, when you may be looking at home ownership. And watch your deductions, right? Entrepreneurs tend to want to write off everything so they don't have to pay taxes back to the government. But that's a double-edged sword from time to time. So because if you write off everything, now you don't have the income that you may need. So you want to be able to watch your deductions. And, for all these tips, it's really important for you to, if you need to, get independent tax advice that can help you set up and get ready to start. So that's my bit to you as an entrepreneur. I am really anxious to see more entrepreneurs move into the space of home ownership. I often say, you may not have the income now, but also you may have a partner. So how can you and your partner pull together to be able to have this asset that is really needed today for entrepreneurs? Michael, I'm going to turn it over to you to introduce yourself and go into the technical aspect of home ownership. And Michael, it's over to you.
Thank you very much. You guys hear me okay, yeah? Okay,
Yes,
Susan?
yes.
Okay, great. A good point on the last one, and just in case I don't pick it up later on, great to write off things, and as entrepreneurs, you should do that and consult a tax accountant. But, I had a friend that was getting into a mortgage, and he was self-employed, and he was very cautious and made sure that he paid himself a salary, during those years, because it does come with a double-edged sword, because you might not have the income satisfaction that the financial institutions are looking for in order to get your home. I digress. I'll go back to the beginning. Good evening, everyone. Thank you. Buying a home is very similar to planning any large event. To get what you want, you need to be educated, informed, and prepared. So, here's what you're going to need to get started when you're thinking about home ownership. Understand the cost of home ownership and determine your readiness for home ownership. Those are two distinct things. Are you saving for a down payment? And how much you can find out how much you can afford by getting a mortgage pre-approval and meeting with a trusted advisor, right? At Alterna, we like to, take the time, understand your financial needs, and go through, where you are in your life stage and what product fits your needs the most, right? You should also consider getting a credit report, understanding what your credit status is, and then look into hiring a reputable agent and trusted real estate lawyer. So it's a lot. I'm here to help to break it down for you, and so that you'll have, it's not as scary as it seems. And I would encourage people to share on the chat, any questions that you might have. Susan and I also have Maddie there to monitor the chat, and asking questions is a great way of really getting candid feedback on what you need to prepare yourself for home ownership. Let's go to the next slide. So these are some of the questions that we wanted to kind of pose to you, and take your time in reading it. I think it's important to, ask yourself, how much can you spend? And we'll get into how you can create a budget and look at what your net worth looks like. Have you saved enough for at least a 5% down payment? That's the minimum amount you need to get into the market. And so, as much as there's a rising housing costs and it is a hot market, a lot of bidding and whatnot, it's nice to have a big down payment, but sometimes you look at it and say, I might not have that kind of money. The good news is that you can still get into the market and still get a mortgage with a 5% down payment of the total purchase price of the home. That doesn't mean that you qualify for that. That's a whole nother thing that we look at when it comes to income and your credit. Do you have a regular income source? Is it salaried? Is it self-employed? Do you know your credit history? And have you had a good handle on your consumer debt? We got one chat that came in. What's the maximum 10-year period for mortgage? So, we'll get into a little bit of that, but really there's 25-year and 30-year amortization. We can go into the terminology as well afterwards, but a 30-year amortization is how long it's going to take to pay off your mortgage. And if you qualify for that, again, that's why we encourage you to see one of the mortgage advisors. If you qualify for that, you can expand your payments through a 30-year amortization. Let's go to the next screen. So throughout your home ownership journey, you should have a good understanding of what costs are associated with the closing of the home and the ongoing cost to maintain. You might have set aside enough funds to close the home through a mortgage and a down payment, but did you also think about the costs of keeping the home running efficiently? So let's just review that really quickly. On the closing costs of a home, there's always going to be an appraisal fee that's going to be required for a financial institution to understand the value of the home. So this is really important to think about, because if the appraisal comes back less than the purchase price, because we're seeing a lot of overbidding than what the posted purchase price is, if you do overbidding, that's all on your own dime. That's your own money. The bank doesn't lend extra just because, if the home is listed for $1 million and it goes for 1.2 million, the bank is going to appraise it at $1 million. So if you put on the extra 200,000, that's going to be coming from your own sources. So it's something to think about when, talking about an appraisal. But there is a cost of, between $250 and $500. Got to think about your down payment. More to come on that. You got to think about a home inspection fee. These days, people are going in firm with their offers without inspection. There's a bit of a risk there, especially if it's an older home. You want to make sure that the pipes are good, electrical is good, floorboards, foundation, things like that on an older home. So something to think about putting into the sale or purchase agreement. Mortgage insurance premium, we'll talk about that. Again, if you have 5% is the minimum down payment, but if you manage to save up to 20% of the purchase price, you won't have to pay into a mortgage insurance premium that's legislated by the government. More to come on that. And then also think about the legal fees and disbursement that the real estate lawyer is going to charge. There is, that can be range between $500 to $1,200. Any kind of questions that you guys might want to bring up on closing costs? Okay, and feel free again to chat. So ongoing costs. Have you thought about what property taxes look like on a monthly basis too? Right, when you break it down and how that lines up with your pay. There's home insurance that you have to think about. The utilities. Do you have a good handle on water, hydro, electricity, different rental things, maybe a water heater rental, things like that. And then the general maintenance and repair and land maintenance for your place. These things all add up, right? And it's not to overwhelm you or to say or to scare you, but it's being informed and educated on home ownership will allow you to get into the market knowing what kind of critical decisions you need to make, what's best for you, right? What works for some people might not work for others. And so it is very individual in its design. Let's go to the next screen. So determining your home readiness, calculating your net worth. So what does that mean? You know, what kind of assets do you have? Do you have a, you know, little savings, a little nest egg of a savings? Do you have a retirement retirement savings plan? Do you have any kind of tax-free savings plans? Do you have anything, you know, like a secondary home or any other asset that you want to include? And then we look at then the liabilities. And when we talk about liabilities, we talk about unsecured credit. So unsecured lines of credit, loans, credit cards. And so you take a look at both, right? And you kind of put that together. And another thing that you might want to also think about is income. So understanding your spending habits, how much do you earn on a monthly basis? And then how much do you spend on a monthly basis? You know, the power of creating a budget is important, and it's impactful. You really need to think about where you're spending your money. And so the difference of what you earn and spend is an estimate of the maximum monthly mortgage payment you can afford. And we'll get into a little bit more. Calculate the total funds that you need up front. You know, so how much do you need to cover the upfront costs, like that down payment, land transfer tax, lawyer fees, moving costs, and some of the other things that we were talking about, right? So how much total funds do you need? You know, determine how your budget will look as a homeowner. And that's something where a lot of people don't do. And then all of a sudden it's a surprise. You get, you know, how much is this one? And this one's going up. And how come we're paying so much more this year than last year? Having a good understanding of your budget and the utilities and bills that you have to pay is important. How can you do that? It's a lot of stuff, right? I do a lot of talking in this presentation, and you might feel kind of exhausted. You know, speak to a financial planner, a mortgage advisor, right? It is important. And again, you know, at Alterna, we like to take our time to really get to know you and to really understand what the best, you know, advice is for you. Because, you know what, we see a lot of times people go in at the absolute ceiling. Is that the best advice for you? Is that you know, the financial, is that part of your total financial plan? Next slide, please. Any questions there? Anybody in the chat or anything that you might have? So down payment, we briefly touched upon the 5% is the minimum down payment. A lot of people say, like, how am I ever going to save, you know, that kind of money? It is a lot of money, but at 5% of $1 million home is a lot more attainable sometimes than trying to get that 20%. We'll also talk about multi-ownership mortgages. People are using gifts and partnering with family and friends to obtain mortgages and to obtain home purchases, right? Now, a conventional mortgage is that you've saved up 20% of the purchase price for a down payment. So a conventional mortgage means that you don't have a mortgage premium insurance. So that leads to a high ratio mortgage. A high ratio mortgage is anything less than the 20%. It needs to have default insurance from the government, and then you need to pay a mortgage premium. It's substantial, right? And so, like, not to the point where it's unreasonable. However, you want to strive to put as much down as you can because there's a lot of benefits to it. But again, if you're thinking about how much you need, 5% is the minimum to get into the market. I think there was a comment here. Question about the new trend of people selling and remaining in their homes. Is this a loophole in the market? You know what, we can get back to it, and then maybe if we can just diarize that for a little bit later on, for sure. We can also answer them afterwards too. We can record them down and then answer them for you, so we can do a follow-up. That would work as well. Let's move to the next slide. How you can save for your down payment. Okay, great. You know, how can you start saving for your down payment? You can utilize the high interest savings product, but that is a bit of a older product that doesn't have great returns. It is a great way of starting the process of saving for a down payment. That's important, right? Because you need to pay yourself first. And so there's another slide that will talk about that, but paying yourself first is a great way of ensuring that you have savings aside towards any of your financial goals. But a high interest savings account is one way of doing it. I think I'll move to the third one there, and paying off your debts. Pay your highest interest debt first, which is typically a retail credit card. Over 21%, 22%. You got to get rid of those things. If you are serious about getting into the home market, there are some sacrifices that you have to make. And some of that is reducing those high interest debts first. Even the loans that you might have, or a line of credit, an unsecured line of credit, you would want to look at paying those down first, because it does have an effect on how much you're able to qualify for a mortgage. I would like to emphasize also the first-time home buyers program, the second point there. That is a great program to take advantage of that not enough people do. The strategy, it includes using your retirement or your registered savings plan as a means to cover some of your down payment. So if you have money in your RSPs, you're able to use that money, take it out without paying any taxes on it, and use it towards your down payment, up to $35,000. Some of you might be saying, well, I don't have any money in my RSPs. There are programs. At Alterna, we have a program, an RSP loan, where we provide you with a loan, and you put that money into your RSP. You leave it there for 90 days. Then you're able to take advantage of the first-time home buyers plan and take it out and use it. You might say, oh, it's only $35,000. Well, typically there's, if you're a single purchaser, of course, right? It might be, anything helps. But if you're two people, all of a sudden it's $70,000. If you're three people, it becomes much more substantial when talking about the first-time home buyers and how you can utilize your RSPs for a down payment. Okay. Oh, and then just the last one here is find cheaper ways to do things. And this one sometimes is a hard pill to swallow because we love the things that we love. But, are we buying full price, or are you buying sale price? Are you eating out, or are you cooking at home? How many streaming services do we all have? Or, maybe that's a tough one because I got Netflix and Disney and Prime and stuff like that, but do you need them all? And so that's one way of thinking about, I'm getting serious of getting into the housing market. Next slide, please. So some mortgage terminology, just in case you're unfamiliar with it, I'll just briefly go over this. A fixed mortgage interest rate. It's a fixed rate. It doesn't change for the term of the mortgage. So the mortgage term is how long you decide that you want to negotiate a rate. So for example, a lot of times you hear a 5-year fixed mortgage interest rate. So a 5-year fixed mortgage interest rate means that you have a fixed rate for 5 years and it doesn't change. Your payments don't change. And we'll go into on the next slide, we'll expand on that. An open mortgage is one that you can pay off at any time, but it has a higher interest rate. The closed mortgage means that there's a set term to it. Pre-approval is what we recommend at all times to get a pre-approval before you put any kind of offer on any home, because you need to know how much you qualify for, give or take. Amortization is the length of time it takes to pay off the mortgage, typically either 25 years or 30. The term we already covered. A variable mortgage interest rate is a rate that fluctuates. So there's a prime rate that the Bank of Canada sets, and that cascades down to the financial institutions, and that rate can move. Typically, it's been a lower interest rate than a fixed mortgage rate, but right now we're moving into a different type of rate environment where rates are moving up. And the Bank of Canada has already talked to us about how next year, it's going to be moving up, over 1% over the whole year. I see a comment there. Is it really, sorry, I'm going to just pick it up. Is it really practical for a single person to purchase a loan? It is practical, but again, you have to think about, there's a lot of variables, right? Where do you want to live? if you want to live in downtown Toronto, it's going to be costly, and there's going to be many sacrifices being made. If you're willing to commute, then things open up quite a bit, right? Do you need a single detached home with 2-car garage, or are you comfortable with a village home that has a garage, but there's people beside you? So the first step, and just like anything that is very important in your life, the first step is the most important, and it's also the hardest. So I would recommend you gotta come in to see one of our mortgage specialists, because that's just any time, right? For anything, you need to go to the specialist. Let's move on to the next slide. Okay, sorry, let me just get rid of this. The importance of a mortgage pre-approval. Like, I cannot stress enough the importance of a pre-approval. We see from time and time again, people coming in last minute saying, I just put an offer on a home and I need to see if I qualify for, a really large mortgage. And it kind of doesn't work that way. There are exceptions sometimes, and sometimes things happen, but the normal progression is to go to the bank and say, what do I qualify for? And there's a series of questions that we're going to ask, but, in the past, not in so much this current housing market, in the past, you would put a condition of financing on there, a 5-day condition of financing on there to say, I need to make sure that I can get the financing for this home. Now, that's being far and few between these days, because you have to put in firm offers into homes. That's just the environment that we're in right now. So you do that before you go house shopping. You go to our credit union, you get a pre-approval. So, when you have it in hand, it also gives you purchasing power. It gives you more leverage to negotiate when buying a home. And sometimes what I've been hearing in the market is that almost every offer requires some kind of confirmation that you already have that financing in place, because they're not interested in, going back and forth. You're going to save time by narrowing your lists of home within your price range. And so it's going to help you overall in your home journey. Move to the next one, please. Co-ownership, today's housing market is hot. And with that lens, many Ontarians are receiving support from family for down payments or partnering with family and friends to obtain a mortgage. And so it's nothing to be embarrassed about. I had that question some time ago. Will a credit score be affected if pre-approval taken multiple times? So to go back to that last slide about pre-approvals, and if you are seeking credit, and so meaning, are you going over and over doing an application, at one mortgage broker or at one financial institution or at these different places, the more hits you do, the more it attacks the character of who you are, right? Because it looks like credit seeking. So I would be very, very cautious in going to a whole bunch of different places to get pre-approvals or to inquire about it, because overall, everyone is allowed a certain amount of credit based on, just to hear me out here, and this is a very basic way of looking at it, right? It's based on your income and your credit. So if you have good credit, that's great, big check mark, okay? Meaning that you pay all your bills on time, you have no collections, you have no, a bankruptcy or consumer protection or anything like that, okay? So you have good credit. The second piece is your income. And if your income is a good income, but you don't have a lot of debt, let's assume you have no debt, you can typically look at 3 to 4 times your salary. Okay, so with no debt, good credit, and whatever your income is, then you look at it that way. Yeah, I think we got a question. Go ahead.
Not seriously. Huh?
There's another question here. I don't know if somebody's coming on or if you wanted to mute. Yeah, so does Alterna work with mortgage brokers? Yep, of course. Of course, there's been a few people that I've referred through a mortgage broker and have gone with Alterna. So absolutely. And just to get back to the can't qualify for a mortgage on your own, you know, again, gifts from parents or family members have been proven to be very successful. We're seeing a lot more of that. We are also seeing a lot more of co-ownership, you know, friends getting together, cousins getting together, you know, brothers and sisters, generational families coming together and saying, look, it's a hot market out there. The supply might not be there, so we're going to be paying a bit of a premium on our home. Let's think about a different way of living. And so it's not for everyone, and some people want to try to do it on their own, and that's admirable. But again, you have to think about the sacrifices that you're willing to make in order to get into the market, because I can't, again, stress that enough, that you can't be a player unless you're in the game. And you know, I hate to put it in that term, but you can't get in, you can't do anything unless you already have a property. And so getting into the housing market is an important step. And using your friends and family is one way of helping you qualify for a mortgage. Okay, let's go to the next one, please. Okay, so you know, at Alterna, we really pride ourselves on being upfront with you, and I think I really do believe that it's the difference, the Alterna difference, as opposed to, you know, some of the bigger players that you become a little bit more institutionalized, you become a little bit more like a number. We do take the time to speak candidly to you, because it's important that when you're applying for a mortgage, the biggest purchase of your life, that you read the fine print, that you know that you know exactly what you're getting into, and you're able to ask questions, get a truthful response. You know, some considerations when you're shopping for a mortgage include, you know, think about, is there an introductory rate followed by a higher ongoing rate? Sometimes you'll see these billboards for 0.99. Well, that's great for the first year, and then it's 6.99 for the remaining 4 years. And so you want to look into that, right? And ask a little bit more questions. Are there cashback offers? And what happens if you renew early or sell your home? Do you have to pay back that cash? Is there prepayment options? So meaning that, are you able to accelerate your payments? Are you able to put lump sum of money onto your mortgage? Might not affect you now, but in the future, it might. And so again, that's something that you want to think about. How is the penalty calculated if you sell your home? So you got to think about, if you're midterm of your mortgage and you decide to sell your home, what does that interest look like? Can you even move your mortgage from one home to the other without any kind of penalties? Are there any hidden fees? These are some of the risks that are involved when looking for a mortgage company. And again, I think you have to speak to the truthfulness and the type of relationship you want to build with your banker. Okay. Let's go to the next one. If I was to take a quick poll, how many of you here know your current credit score? We find that not a lot of people understand their credit, even know what their credit score is, and if there's any kind of fraudulent activity happening under their name. I recommend, if you've never checked your credit score, you should. Go to equifax.ca, and I think you can get it free, and it gets sent right to you and within, I think, 10 business days. There are other apps and stuff that you can do to get it, but Equifax is the best way of doing it because that's the one that most Canadian institutions use. But you need to know your credit score for so many different reasons. One, in order for you to be approved for a mortgage, you need to have a strong credit score. So at least that score of 620. If you don't know what your score is, how can you do it? How can you move forward, right? The other thing that you should think about as well is, Is there any companies that are reporting missed payments? You want, on credit cards or on phone bills, or, is your gym membership going into collections and you don't even know? And those are all some of the things that can negatively impact your credit score. And then ultimately the interest rate also for your loans. So having a good idea of your credit score and the things that are on your credit bureau is a good way of understanding if there's any kind of fraud happening and what you need to do in order to qualify for a larger product like a mortgage. But I do want to emphasize that the credit score is only one part of our credit decision. We also consider overall net worth. That's why you should calculate that. Income versus your debt ratios, and credit worthiness. So credit worthiness is your score, is one piece, but also a history of your payment schedules and stuff like that. Your credit utilization. These are all some of the things that we use in order to qualify you for a mortgage. Go to the next one. So finding a reputable real estate agent and lawyer, it's important, and definitely you've earned the right as a paying client to ask questions. So when you're talking about your real estate agent, ask them questions like, how familiar are you with the neighborhood that I'm looking at? Talk to me about your marketing strategy. Things like, how do you navigate the bidding process? What is the reputation on the street with this real estate agent, right? And so asking the questions are important. Similarly, with a real estate lawyer, you would like to know, do they have experience in real estate law? What is the cost? And you can compare it. You can shop a lawyer to a real estate lawyer, of course, just like anything else, right? And so finding a reputable real estate agent and lawyer is very important. Go to the next one. Fixed or variable interest rates. It really depends on your financial situation and preferences. Yes, this is a hot topic of late. Historically, variable interest rate mortgages has been lower. It's a fluctuating rate, but it typically has been lower. Over the last few years, however, even starting in 2008 and 2009, fixed rates, there's been some fluctuations there. We're at a very different time right now where we've seen rock bottom rates, and we've seen that for some time, 5-6 years. And now, especially after the pandemic, supply chain delays, and a lot of different factors globally, rates are going to be slowly moving up. They can't go very quickly because that can really destroy the economy, but they're going to do it in pieces. But they've also indicated that they are going to move those duration of changes at a little bit higher frequency. So fixed rate, if you're a peace of mind type of person, so for myself, I'm a peace of mind type of guy. I like to know what my payments are every month, and that's it. So I do something like a 4 or 5 year fixed mortgage. I know what my payments are, I know what rate I get, and it's done. A variable interest rate, where I might have lost out on my variable interest rate, periodically, it fluctuates. So it might be lower than the fixed rate today, but what happens in 2 years? What happens in 3 years? So if you go with a 5-year variable mortgage, that means for 5 years you're going to be on a variable mortgage, and it can fluctuate. And so your payment might change what that looks like towards interest and principal. So it really depends on the type of person you are. If you are a peace of mind, I just like to know what my payments are, and I'm willing to pay a bit of a premium, 10 basis point, 0.05, extra to have that payment, or am I willing to book in something that has the potential of moving? Next slide. People are at different stages in their mortgage cycle. Some are purchasing or looking to purchase. Some are mid-mortgage and looking to either refinance or negotiate better terms and rates with their mortgage. And other people are looking to become mortgage-free faster. There are different ways, and this is why I say to you previously, when you're looking for a financial institution to book your mortgage with, you really need to know what some of the benefits are of their mortgage product specifically. At Alterna, for example, we have a prepayment privilege of, you can do a 10% prepayment privilege, so a lump sum of 10% every year of the original mortgage amount. So if you get you know, $1 million mortgage, you can put $100,000 lump sum every year without penalty, and that will reduce your principal. Also, you can double up your payments up to 100%. So if you're paying $1,000 a month, will allow you to move up to $2,000 a month and exponentially speed up the amortization of your mortgage. So does every institution have something like that? They do, but at what is it? 5% prepayment, 15%? Are you allowed to double up your payments? These are some of the questions that you want to ask. And if you're not asking, the advisor should be telling you. Yeah, so the option 2 is the increase your mortgage payments amount and increase your mortgage payment frequency. So there's, you know, regular bi-weekly payments, okay? And that's going to get to, you know, bi-weekly payments or semi-monthly payments. Or are you doing a rapid bi-weekly payment where you're adding in one payment extra per year? That actually significantly reduces how long it's going to take to pay off your mortgage, believe it or not. Adding $50 to your mortgage payment will absolutely have a huge effect on how quickly you pay it off. Okay, let's go to the next one. So we're coming to the tail end here, and I just wanted to make sure that I got through, you know, what we got through within the hour, so then we could even address some of those questions there. Because we have until 6:30, but you know, there is an 8-step guide to purchasing a home. And I think it's great for you to take some notes and just write this down, but make sure you're ready and understand the cost of owning a home. It's not just about the purchase, it's about the entire home journey. And have you put in all of the other costs associated with the purchase of your home, such as, again, furniture. Have you thought about how you're going to furnish your house? Have you thought about the property tax, the extra property tax? Have you thought about maybe a fence has to go in and different things like that? So the cost of owning a home. Getting that mortgage pre-approval in advance of looking for a home is important. Finding that real estate agent and lawyer is going to be something that I would say you could do after you get the pre-approval and you know what generally you're looking for. You know, making an offer on a home that fits your needs and budget, again, do you really need to go to the ceiling on this? And if you do, what's the backup? You know, is there a buffer? Do you have a nest egg built up? Have you also considered not only purchasing a home, but the total financial picture? Have you thought about saving money for a trip? Have you thought about saving money for retirement? It might seem overwhelming, but we do this for a living. So I can talk very freely about making sure your money works for you automatically. So putting that $25 to a savings account, $25 to an RSP, $25 to an RESP if you have kids. You know, these are the small things that you do to get you going. Number 5 is getting a home inspection. Once you do find a home that fits your needs and your budget, I would recommend doing that. But again, especially for an older home, a newer home you might be able to get away with that. But again, we recommend that you get a home inspection. Finalizing your mortgage with your mortgage advisor. Again, here at Alterna, what we like to do is meet with you initially, go over some of the steps, go over some of the, you know, learn a little bit more about you and your family and what's important to you, and then go through what financially makes sense for you, given what you've shared with us, and then providing a product that you're going to be satisfied with. and that is going to get you into your dream home. Closing the deal is probably the best day, one of the best days of your life. And so, and then move in and get ready for that long journey ahead. Is there another slide there? One thing that I think even Susan alluded to before, but what a lot of people don't know about Alterna is that we are a fully fledged financial institution. We don't only just do mortgages and loans and lines of credits, but we have a great footprint with investments. We have a great wealth team. We have everyday banking services. We do business, retirement, investment planning, and different ways to bank. And we are pretty innovative. We're able to be nimble, and we're just that much more personable. And I think that's one of the Alterna differences for sure. I think that was all the questions. I don't know if anybody wants to facilitate that or.
Yeah. Hi, Michael. It's Maddie. I've been recording some of the questions. I can read them out and go through them. And if you think you've already maybe answered some of them, you can just say we can go to the next one if that works. And then, we can leave up your contact for you and Susan. So, So one of the questions was, I have a question about the new trend of people selling and remaining in their home. Is this a loophole in the market?
I'm not sure if I understand that one. So selling and remaining in the home.
I'm not sure if they mean having a longer closing date potentially.
Oh, I mean, if that's what we're referring to, then yes, that happens where you sell your home, then you remain in your home while you're going to purchase another home. We can do bridge financing. And just, most institutions do, but I would say that it's maximum 120 days. We won't, at Alterna, we cannot extend that farther, right? So if you purchase a place, but sell your place afterwards, there needs to be only that 3 or 4 month buffer.
Great. I think you might have answered this one, so let me know, but what is the maximum 10-year period for mortgages?
Yeah, so 25-year or 30-year amortization. The one thing that I would say to you is what I encourage our clients to do is if you can approve for a 30-year amortization, do that. And because you can always determine what your monthly budget is on a mortgage. So say, for example, you can afford $2,500 a month, but your mortgage amount is coming at a 30-year amortization is coming at $2,000. Still pay the $2,500 on there because it'll exponentially speed up your amortization. But if something, you lose your job or you need some more disposable income, you can always move back to that 30-year amortization $2,000 amount. If you decide to go with a 25-year amortization, that is the minimum amount. I mean, it might sound confusing, but again, come and see us and we can explain it to you a little bit better.
What is the advantage to paying your mortgage faster? Do you save on interest? Is there any negative repercussions?
So it's to pay off the mortgage faster is to less interest, totally, right? I would encourage you to look at that, but this is again why I say to come and see someone, especially a financial planner or advisor, because it's not just about that mortgage. There's opportunity costs involved. So say, for example, you're getting your mortgage rate at 3%, but your rate of return on investments is at 6%. Does it make sense to put all of your money into the mortgage? Or does it make sense now to leverage some of that investment gains as opposed to putting it all onto the mortgage and not realizing some of those gains? I have a lot of clients that say, I'd rather take out, and so some of our well-to-do clients, I'd rather take out a mortgage and pay 3% instead of using my own money. And for entrepreneurs out there, I think that resonates big time because you have your money there. Why would you want to tie that up into a mortgage when you can use that with an investment that's going to give you some returns that are going to be more than what the mortgage rate is?
Great, thank you. What about rent to own? Is that available? Is it something viable? Any insight on that?
We don't see a lot of those. And I'm not sure if, like, I mean, we would finance the mortgage part when you're ready to own. Rent to own, you would have to engage a lawyer to make sure you're looking at this contract very in depth. It's worth you to pay $1,000 for a lawyer to review it to make sure that everything is on the up and up. Because I don't see very many drawbacks on rent to own, as long as, you know, you might be paying a little bit more in interest over the short term, but in the end, if you end up owning the home, I can see benefit to that.
Is it true that after a certain amount of years have passed, you're able to qualify again as a first-time homeowner?
Correct. The last that I know was 5 years. So if you haven't owned a home in the last 5 years, you're able to re-qualify for the first-time home buyers plan, yes.
Great. Does Alterna work with a mortgage brokerage? And this is sort of a multi-question. How far back of a history do creditors look? And finally, if someone had a poor payment history 5+ years ago, is that considered when looking at a loan?
Okay, yeah, a bit of a loaded question there, for sure. First, what was the first one, Maddie?
The first one was, do we work with mortgage brokers? So I think you had mentioned yes.
Right, yes. So a lot of brokers will always look to get either the best rate, or depending on if they're a good broker, they're finding out more about you and what the best product is. So Alterna works with all types of brokers. So you can actually ask your mortgage broker to inquire with Alterna to see what the best rate is. And I will say, in my most recent experience, like the last 6 months, Alterna has easily been the lowest rate through a mortgage broker.
That's awesome.
I know that, like, for a fact, by the way. So I can't share because it's a privacy thing. So I can't tell you exactly, but I can tell you firsthand that the rate has been the lowest, for sure.
That's great.
Then what was the second piece?
So how far back of a history do creditors look? So if you had poor payment history, say over 5 years ago, is that considered also when looking at your loan?
Yeah. So if it was like, so to be honest, like things that are 7 years and earlier, so anything past 7 years typically is not there. But if it's a bigger issue, like a bankruptcy, it could stay on there. We look at that. Now, if you've had some issues in the past, right? It doesn't mean that, you know, it's the end, be all and end all. I would say you need to now show a history of good payments going forward. So say you had a bad hand, and 10 years ago you had to declare bankruptcy. Have you proven since then that you're able to manage your bills, pay everything on time, things like that, right? And so it's that credit worthiness that we're looking for. It is going to be difficult to qualify somebody who just declared bankruptcy last month, right? That's going to be very, very difficult to do, right?
Is your credit score affected if you do multiple pre-approvals?
Yeah, we touched upon that, but yes, it would be affected in a small way, but 1 or 2 points times 20 inquiries is a lot.
Okay. Is the credit score that I see on my bank account online correct, or is it close to what my credit score would be?
Is this the one from, I don't even know if we do that on the Alterna app. I would say the most accurate one that's up to date is with Equifax. So I would highly recommend people should be looking up Equifax maybe once every year is a little bit much, but still not a bad idea. But once every 2 years, for sure. You want to see if anybody is using your name for identity theft. That's another reason why you should be looking after your credit. But the second piece is, are you building your credit? Are you working towards increasing your credit by paying your bills on time?
Great. How can businesses qualify for investment mortgages?
So when we say investment mortgages, that's a bit of a different ballgame. Primary residence, I mean, it's pretty straightforward. We use your T1 generals. We go over what your 2 years, 3 years business financials are. We do have a little bit more discretion when dealing with self-employment, and it needs to be reasonable for sure. You know, but an investment mortgage for an investment property will have higher scrutiny and a little bit more criteria on how that's going, how you can pay that back, basically. Mm-hmm. So it is possible. Yes, we do them. Absolutely. We just have to have the right things in place. So again, business financials, T1 generals summary is always a good way of being able to break down the business, right?
Great. What can Alterna do to help people who need second mortgages or even a third mortgage?
So meaning that you have a mortgage at an institution or even with Alterna and you need another mortgage, you know, I would look at doing a secured line of credit. And again, it doesn't have to be at the institution that you're at, but a secured line of credit is a secondary kind of mortgage. Again, everybody gets so much. So again, if your home is $1 million, we can only lend out 80% of that. So take your mortgage, and then take any kind of secured line of credit, and it can only equal 80%. Then if you have unsecured debt, like a line of credit, you know, for $20,000, take that away from how much mortgage you can. If you have a loan, take that away. If you have other debt, then it's going to decrease the amount that you have. So that's something to think about.
As a Black entrepreneur, how can I balance managing my business with real estate investment for income?
Great question, and probably would take a little bit more in depth. But how could you balance your business? Say that again. Say it again one more time.
How can I balance managing my business with real estate investment for income?
I'm sure, you know, tax accountant is important in this one, I think. I do have a friend actually who is self-employed. He manages his own sheet metal company, and he has investment properties, and he makes sure that, you know, what he's getting in rent at least covers the mortgage payment, if not an extra $100, $200 for maintenance of that home, right? It's a little bit of a deeper conversation. And what I would do is put you in front of one of our business advisors. That's somebody who has a little bit more knowledge on specifics about business. And we definitely have the right people in place. Like I'm at Bay Street. It doesn't work for everyone. And I do have a great representative there. But reach out to me and I can set you up with somebody for sure. And Susan can too.
Great. So for joint mortgages, how do you secure the second party?
I mean, typically both people need to be in branch to do that, and it's the same type of application for both individuals. We do a privacy agreement where you give us consent. We pull both of your credit bureaus to make sure that both are on the up and up, and that we have good credit scores and a good history of payment. And then we bring in both incomes. So with both incomes comes both debts as well. So sometimes, you know, we find that, well, I'm bringing in my parents for the mortgage. Okay, that's great. And they're really well off and they have a great income, and that's great too. But if they have a big mortgage as well, it's not going to help the case as much as somebody who has an income that doesn't have a mortgage. Right? So that's something to think about.
It is a reverse mortgage for aging in place.
Is a reverse mortgage, sorry?
For aging in place.
Yeah, so a reverse mortgage is becoming more and more popular. And I think there's a lot of false things that are said about reverse mortgages, to be honest. And I think people need to do a little bit more research on what that means. We don't offer a reverse mortgage. However, we do partner with Equitable Bank to set you up with somebody. I think it's a good plan. if it fits for you. A reverse mortgage is basically you get, say, 50% loan to value of your home. So say it's $1 million home, it will give you a $500,000 mortgage, which is $500,000, right? Towards you get $500,000. You can invest it. You can use it for your day-to-day living, but you don't actually have to make a payment until you either A, sell your home, or B, unfortunately, if you pass away. And so there is a higher interest rate involved. So where we're offering maybe 3%, they might be doing 5%, but you don't have to pay right away. So I do think it is built for specific individuals. It's not for everyone, but I do think there is a place for it.
We have one here, which I think is a personal question, which I think is great here, is what advice would you give to someone with a credit rating of over 680, about $80,000 of personal income and CCB income, and about $12,000 in debt, who's looking for a home? Is this someone that would fit the profile of getting a mortgage? Would this be possible?
Yeah, for sure. It sounds like exactly the type of individual who would fit the course, especially because of the low debt. You know, 12,000 in low debt is nominal. That's nothing to like. That's okay. That's not going to have a huge impact on what you can afford. If you're looking for yourself, so the credit score at 680 is good, and I'm sure you're building towards getting it over 700, which is fantastic, and you're right there. But I mean, 680 is going to do the job. I would say 80,000 times 3 to 4%, 3 to 4 times. So, you know, 240, 250 to, you know, $300,000 mortgage, definitely. But then you have to consider what the cost of the homes are. And so cost of the homes, like, well, if you're only going to give me 250, 300,000, you know, where am I going to come up with? I got to buy a place at 800,000. So then this is where you have to think about what sacrifices are you willing to make? Do you need to live right downtown, or is it better to move in maybe more on the outskirts? Do you need that big, huge home, or are you comfortable with a smaller, you know, apartment or condo?
This one I think is really good, actually. What do you think is more important, reducing your mortgage debt or saving for retirement?
Great question. For
Yeah.
sure. Well, it's a great question, and the way I like to answer it is the same every time. And I've been saying it for a long time. If you have $100, okay. So my parents, when they immigrated to this country, right, they were very focused on paying the mortgage. Pay the mortgage, pay the mortgage, pay the mortgage. Get that mortgage down. You have to get rid of that debt. At what cost, though? When I look back at it, it's very good and very admirable, and that's a great mentality to have, is to pay off the debt. But at what cost? The way I like to explain it, if you have $100, okay, and you have a mortgage, right, a larger mortgage, anyway, any mortgage, you have $100. $50 goes towards paying the mortgage. $25 goes towards saving for today, and $25 goes for saving for tomorrow. When I say saving for today, that means like a tax-free savings account. That means your nest egg to build towards going to a trip every 5 years or something like that. Or maybe you want to buy a nice car, or maybe you want to do something in the backyard. That's saving for today. Saving for tomorrow is then your retirement. So I kind of put a little bit more emphasis on the debt without neglecting today and tomorrow.
That's a super helpful analogy. Does anyone else have any more questions that they want to submit? It looks like we've answered basically everything in the chat so far. We have a few more minutes if anyone wants to submit anything else. Otherwise, please feel free to write down Michael or Susan's contacts if you'd like to call them or visit them in branch or give them an email.
Yeah.
This is what they do all day.
Yeah, this is what we do.
I think that's everything that we have here. So I don't know, Susan and Michael, if you guys want to clear things up and close them out.
Sure. I mean, I'll start, Michael. If I had all that information when I was an entrepreneur, you only knew where I would be today. I mean, this type of advice and education is so important. So definitely, I thank you for bringing the technical piece and making this happen. You know, hearing from all those questions in the chat really shows us how important this topic is, not just for entrepreneurs, but for all individuals who are thinking of becoming homeowners. So this, this is the first we've done to this group, and I really want to thank them for being as active as they were tonight and really putting those questions out there. And again, if you want to get in touch with Michael more so than me, because he's the mortgage guy here, his number and contact information is here. But if you do want to get in touch with me as well, we are available to chat some more, give you as much education as possible to make the best financial decision that's going to set you up for success.
Sorry, Susan, I just want to jump in for one note that was here, as they noted that there's some people in this group that are not in the Toronto region. So this person in particular is from Winnipeg, and they wanted to know if there's any support that, I guess, one, you could provide out of province, and two, looking at, building a house versus buying a house, that kind of thing. So I know we're getting close on time here, but is this something you could assist with people out of province?
Michael, do
you know what? Through
the bank?
Yeah, I think through our Alterna bank, we have Alterna Savings, which is in Ontario, but through our Alterna bank channel, it's a digital channel, I believe that we are able to help. I would just recommend reach out to me, and then I can get some more details. Just to answer your question really quickly about building from the ground up, is it cheaper than already having a house? There's no contact in Winnipeg per se. But again, if it's done through the Alterna bank, we might have a digital advisor that could help you. But if you're talking about ground up as opposed to a house that's already built, we do construction draw mortgages, but you got to get the place up to 35% already completed. So that's your own money. Once you get to the 35%, we do a couple of appraisals throughout, and we give you pieces of the mortgage at a time. So just to let you know that that's something that Alterna does, and just reach out to me, and I could set you up with the bank. Anyways.
Great. I also want to thank the EP Academy and Olatuin for allowing us to present this evening. Thank you.
Yeah, thank you very much, everyone.
Thank you. Thank you very much. Thank you, Susan, and thank you, Michael, and thank you, Madeline. Really appreciate your coming tonight. And I believe we've had such an enlightening session. I think we've had so many questions. I can't even imagine how Michael took all of those questions. We still actually
That's where you do the most learning, right? That's where you do the most learning, is through questions. So.
Absolutely, yeah. We actually have, we do have we have a few more questions. What I'm going to do at this point, ladies and gentlemen, is let you also know that we will be asking Alterna Savings and Loan to come back maybe in another quarter, because we know that we have another class coming on. For most of us, we don't have to wait until another quarter to get our questions answered, because you do actually have the contact details of Michael and Susan on the Zoom, or on the chat box. And so I'm sure that has been shared with us. And if I can also kindly ask that you share the contact details with the group on the YouTube channel, so that if somebody can just drop that into the chat box also. If you're within the GTA area, I'm sure you can contact them for additional information. But I must say that the session tonight has been quite enlightening, very insightful, and I'm sure that a lot of these questions have been answered. So I believe that because this is also on YouTube, you can also watch again and listen over and over to get some of those clarifications that you might require. Next week, we'll be coming back to class. As we know, every Tuesday, 5 p.m. to 6:30. We'll come back into class next week, and we'll be talking about how to get the business started, what you require, the research, the marketing, and the kind of partners that you require to get your business off the ground. And I want to encourage you to join us again in class next week. The class next week will not be made available on YouTube. Usually we have all of these private sessions, but because of a few groups that have they made a demand, they requested that we make this available online. That's why we're doing this tonight and the one for last week. So make the sessions, you can actually watch the sessions over again for the information. Next week, it will be strictly on Zoom. We go back to Zoom, and then you get some insights again from Cheryl Bedard, faculty officer from EP Academy, and you also get some insights from some other groups from other universities by next week. And so tonight we'll wrap up the class at this time, and look forward again to seeing you next week. We'll touch base with you, Alterna Savings and Loans, if we get a few more details, and we'll let you know when next to come back to class. Thank you, everyone, and have a good.
Thank you.
All right, bye.
Thank you.